It is April 2nd, and this is the video log that takes $30,000 to $1 million. Today I'm going to talk about why I'm so obsessed with beating the market, how I've been beating and crushing the market lately, and why I think it's such an important thing. So first though, let's go over through what happened because I didn't make a video on Friday or Monday. So you don't know what's going to be happening with the account, but here it is. We're sitting at a pretty $55,319. I have not added any money to the account since last October. So huge gains though. This is my 3-month performance here. You can see $12,000. 1 year, just about the same. I was sitting flat for the majority of last year. But I really started this account, taking it seriously about July maybe 1st. Something like that. And so since then I've been doing pretty good. I haven't added any money since like October, I think, over here. So like 10,000 of those gains are natural. All right, now let's go back to the activities that have been happening. By the way, those cryptos, man, I think Bitcoin went over 5,000 yesterday or today. It's kind of crazy. I'm not really into cryptos. I don't trade them. I don't invest in them. I know them pretty well. I know what they are. I know what the technology is and all that. It's just not for me. So I'm probably not the crypto guy that you want to talk to, but I do know quite a bit. Quite a bit. I don't want to sound like I'm some pro. I'm not. I'm a retail investor like you. But I know more, let's say, about regular investing, and I try to stick to what I know. My goal here is to beat the market. I'll talk to you about that in a second. So let's take a look. Apple's been gaining back. It's let's click this over here so you can see the total return. We got $243 just from Apple today. Spotify went up another $20. I had my options, by the way, on Spotify expired worthless, which was great. So I've collected another $150 for these Spotify options, which is helping my account a lot. This is the short S&P fund. I gained $2 since the market was slightly down on S&P. So especially after hours, apparently. Like emerging market fund was up $30. Other big movers are C-SPAN down $23. Energy fuels up $54, URG up $10, Chemico down 15, URA down 18. And I bought GSY again just to park some cash in the meantime. Right now I have a little bit over $1,000 in GSY, which is short term, like 3-month treasury notes, something like that. Quick overview of the account. We have largest holding Apple, and then URA, Wheaton Precious Metals, emerging market fund, Russian fund, C-SPAN, emerging market bonds, energy fuels, short market, Asia Pacific market, realty income, Spotify. The biggest equity return, Apple, Wheaton Precious Metal, energy fuels, biggest equity, Apple, Global X Uranium, and then Wheaton Precious Metal and emerging markets. All right, that's enough for that. What I want to talk about, look at that Uranium, look at that Ethereum up 10%. I actually bought a tiny bit of Ethereum before it popped up for some odd reason. I don't know why I did that, but if you look, I actually have $30 in crypto right now. It's crazy. All right, now that's the account. By the way, the reason I've been crushing market is not just Apple, right? So Apple, first let's take a look at the numbers, all right? So let's see first how much I've beaten the market by, and then we'll take a look at some of the reasons why, all right? So if we go to my 3-month performance, actually let's just take a year. Year performance, 29%, right? 29%. So if we go to the SPY and we click on the 1 year performance, it's 10%. So crushing the market right now. I'm crushing it. I'm beating it by 3 times, right? Not just double, but 3 times. 30% versus 10%. It's quite a bit. Let's take a look at 3 months. All right, 3 months for the S&P is 16%, and my 3 months is 28%. Now, if you think that that's all Apple, it isn't. All right. So the account is up 28%, but if we look at the last 3 months of Apple, which has had huge gains, it's only 25%. So, I mean, it's pretty comparable. If I just put everything in Apple, would have had the same return. But I'm beating even Apple by a few percent, even after that huge surge. Look, from here to here. That that's a pretty big surge. Um, the reason why I'm beating is because of EXK, Wheaton Precious Metals, and other bets that are made. They're going to rebound harder than I thought regular stocks would. Now, have some stocks rebounded harder? Sure, yeah. Um, but that still doesn't diminish anything that I've done. That's a pretty admirable to beat the market to begin with, and that's kind of what I want to talk about today. Is like, why am I always trying to beat the market, and why I think it's pretty important. So 90%, right? 90% of professionals, including fees and retail investors, don't beat the market. They get under what the market's doing. So like if the market drops 10%, they drop 10% or more. The market goes up 15%, they go up less than 15%, or they go down. So many people think of this like it's not a competition, but it really is a competition. It's a friendly competition. Obviously, everybody can get rich at the same time, and we have no room to complain. In a capitalist society, it's not a zero-sum game. Like you watching this video can get rich the same time that I'm getting rich. Like me getting rich does not take away from your ability to get rich, right? Wealth is exponential. It's infinite. It's infinite. You can always create wealth, right? Like I'll give you a couple examples. All right. Let's say I make chairs and I make 2 chairs per week, and let's say my friend makes shoes and he makes 5 pairs of shoes a week, right? And there's $10, and that's our economy, right? The money stays the same. Let's say it's 10 gold coins or whatever. But next week I can boost up my production and make 3 chairs. I just work harder, right? And now my friend can make, instead of 5 pairs of shoes, can make 10 pairs of shoes if he really like cuts down his method, gets in on autopilot, and maybe, right, cut some corners, some sleepless nights or whatever. Now we're wealthier. We have more wealth. We have more stuff, even if the money is the same. Now in modern money mechanics, it doesn't necessarily work like that. When it comes to dollars, the the monetary base shrinks and expands depending on many factors. All right, mostly banks' will to lend and how often these loans get repaid and whatnot. But that's a pretty complicated discussion. So let's stick to that previous one. So we got 3 chairs per week now. So I've created 5 chairs. Last week I created 2. Now I have 3. So I have 5 chairs. I've gotten wealthier and stuff. And my friends got 15 pairs of shoes now instead of just 5. So we've increased our productivity, we've increased our wealth. It doesn't have to, by me creating chairs, I'm not taking away from his wealth, right? We're both wealthier. So that definitely can happen, right? But now, if you don't want to look at the market as a competition, that's fine. But, today, you almost have no choice but to be financially educated. Like all the pension funds, our money loses value by default, right? So it loses 2-3% per year, the dollar by design, all right? And then all the pension funds, they all put in bonds that return 2-3% per year, so that your money basically doesn't grow. And pensions have become more and more unreliable. Like debts are skyrocketing everywhere, and corners have to be cut. like funds take big fees, and it's just really hard to actually have your money grow, and have a return. So you almost kind of have to do everything by yourself if you want to get the middleman out. And that's one reason why I like Robinhood actually, is because they eliminate many of the fees and expenses of being a retail investor. Usually as a retail investor you get fleeced, especially if you're day trading. You're really playing against the house. Like only 1% or something like that of day traders actually make it. So that's a very small percent. And the odds are really stacked against you, and you better know what you're doing, and you got to be better than 99 other people. I was talking about being just better than 9 other people in investing to beat the market. So, during the last year and last 3 months, I've been 1 out of 10. All right. So I'm really happy about that. And I hope it continues. Might I falter tomorrow and crash with the market? Sure, I could. It's a risk I'm willing, that's always out there. Anybody, it happens to anybody, right? Even people that have had a track record of 30 years plus, they still have a down year where they lose to the market. It's very remarkable, and it's incredibly rare to beat the market every single year. I think 1% is a statistic of people have done it for, I forget if it was 20 years in a row or 30 years in a row. Only 1% of people have done it. So it's a very difficult task. And I personally really want to start being one of those people, right? Or at least if I miss a year, the next one I wanted to have such a big percentage that makes up overall. It's very difficult to do. Hopefully, the strategy that I have right now is going to work out. But really, you got to make, my strategy is not going to work for you. You have to come up with your own way of beating the market, right? Because you got to beat me, right? You have to beat me. You have to beat 9 other guys. So you got to come up with something else. You know, like, will I advise you to go into short-term trading triple X funds? I mean, no. Or purchasing puts and calls, trying to, guess the direction of stocks. No, that's probably a sure way of losing all your money. But you have to come up with something, some kind of strat. Maybe you set your stop loss right away. Maybe that works for you. I don't know. But you're competing against people out there. Like, you're no better off, relatively speaking, in your neighborhood, and your standard of living is no better off than anybody else's if you don't look at this as competition. All right? Look, like 100 years ago, nobody had these phones, right? Nobody had smartphones, nobody had apps, and not everybody had electricity and cars and all this cool stuff. Now that's like, we even have monitors and big TVs on our screen. Even people who are on disability and like, collect food stamps have all that stuff. They have cars, right? So, and phones. So the standard of living is so much higher now than 100 years ago. We've all gotten wealthier. Per my example earlier, everybody's wealthier, right? Even, the homeless today are living the highest standard of life ever in history. Okay, so that's all great. But relatively, right, you're still unhappy. Right? You're still unhappy. You want more for yourself. And you do that because it's all relative, right? Like if we drop you in the middle of I don't know, Central India or something, you'd feel like a king probably, judging by statistics. I don't know what your situation is, personally. You feel like a king, but you're here, right? You're wherever you are. Maybe you are in India, but you're probably in the city if you're watching this. So you feel the same way. You feel like, yeah, okay, I have some technology, but I want to do better. There's so many people that are living so much better than me. So it is a competition, you see. It's not gonna stop. Like it's not gonna stop. Like, oh, I just want that, extra $5,000 or whatever it is. Then I'll be good. I'll stop wanting money, and that'll be the end of it. And it's not like that. Once you get that, you're gonna want more, and so you need to outdo the competition. You're really gonna feel good about yourself if you're far and above the rest, and then it becomes just you do things for the love of it, right? It's not that you're on this rat race. um, I mean, I'm not a professional financial advisor or anything like that. I'm not a life coach or anything. I'm just a retail investor, just like you, living beating my head around and trying to learn from my mistakes for a long time. But what I would advise you is acquire assets, and what that means is basically businesses. Acquire businesses that generate you money, or property or rental properties that generate you money, and that's the only path to get out of it. Only path to get out of this like rat race, basically. And once you're sitting far and above and you're beating the market for a few years and accumulating wealth and assets, and then you're finally going to have the freedom to think and do things for the fun of it and for the game of it. But my point is that my 2 points from today's discussion is that one, wealth is not um, a zero sum game. You and I can both be wealthy, and we should be happy about that. And I'm happy about that. I'm happy that I'm where I am, and then Warren Buffett's where he is, right? I'm happy about that. But number two is that it is a competition. A lot of people try to make it out like, oh, it's not a competition, just do this and you'll do well with the rest of the people. And yeah, that's great. But if you're the same as the rest of the people, it's never going to be enough for you. You're always going to want more. So it is a competition, right? You got to win against nine other people, or depending on what your goal is, one against 99 other people. So find that strat that works for you, test it out, and hopefully you beat me and everyone else you decide to play against. All right, guys, that's it. Peace out.